Hello everyone, welcome to the Elliott Wave Forex.com YouTube channel. This is Henry. Today is Wednesday, July 21st. The time is around 1 a.m. GMT. Today we're going to be looking at the chart of the Nikkei. This is Japanese index. Now if you don't trade this, at least you can use this and correlate it with other indices and to give you some ideas what we expect. Okay, so this is a 60-minute chart of the Nikkei. We can see right here we are looking for this rally in the form of a double zigzag, right? So we have the first zigzag here in progress now. Should be ending somewhere in the 100% extension soon, right? So let me fix this a little bit here. So we should be looking for 100% extension here. This ABC right here already hit the 100% in fact, so we could still, um, we could see a pullback soon unless this becomes a 5 waves up, which is possible. It can become 1 2 3 4 5, but for now we are calling it as an ABC, so we should be ending it here pretty soon and do a 3 ways pullback before possibly 3 ways up again to do a double zigzag. All right, so this, as long as the rally stays below 28,854 for now, we could see further downside again in the Nikkei. Now we're gonna take a look and discuss about various possibilities, but within those various possibilities, what you can expect as a sort of like the general idea of Nikkei. Okay, so first of all, couple of possible options that we can have is based on this chart. This is saying that as long as we stay below 28,854, we are looking for more downside, right? That's what this chart is really saying. It's not saying we're gonna rally to 28,200 for sure. It is not saying that um, it will do a double zigzag for sure. We can just do finish a zigzag here and just go down directly. So what the chart is saying is as long as we stay below 28,854, we are looking for another leg lower, and that means if the Nikkei going to go down, then the same can be said with the other indices. Most likely all the other indices going to be selling off as well, right? So that's what I say. Even if you don't trade the Nikkei, you can still find values in understanding the Nikkei's structure, right? Now let's take a look at the uh, if we zoom out and take a look at the larger degree. Now notice here we got W and X in red here. So if we take a look here, it's very interesting here. So this is the peak in the Nikkei, February 16, and since then we've been sort of sideways drifting lower here, sideways to lower, right? And recently we just make this boost on the downside here. Now this is the W and this is the X. So if you take a look here and the daily, so this is the W, this is the X, right? Now a couple of things here that I want to point out. Um, this is not the typical impulsive structure that you would expect if the indices are if the index is bearish, right? Now an impulse will be something like this. This is not an impulse. So to say that this is bearish is not correct because this is sideways, a typical choppy corrective structure here. And thus this entire decline, even though yeah we continue to make a lower low, right, is still corrective because the structure is just corrective, right? Now notice we got a couple of interesting what we call connector, right? Connector. So first connector I can see when looking at the chart here is this, this, and this, right? I can clearly see if once you do this long enough, you can sort of understand the distribution. You can clearly see this leg is more or less the same length as this leg, right? So then that means you are looking at some sort of 1 2 3 equal leg corrective. Now within this 1 2 3, you can see in the subdivision this leg subdivides into 3 and this leg subdivides into 3, and the whole thing is a 7 swing and ending at equal leg. So you can see here if you measure the extension, sure enough it ended at the 100% area, right? So if I were to label this, then this entire move is a 7 swing. 1, 2, 3, 4, 5, 6, 7, and you can place the end of this as, let's say, in the intermediate degree, right? Intermediate degree in blue. This is 7 swing, right? It's not an impulse. It cannot be labeled as an A, and this is your X, right? So within this one, if you want to see in the subdivision, well, we can put it here in the lower degree WXY. And if you want even to break down even further, you break this down again. Let's say this is in the lower degree again, ABC, right? And so by definition, WXY is really an ABC most of the time, right? It's a double zigzag. So ABC here and an ABC there, right? So you have a correction in the X in blue, then you make another leg lower again, and you break below this previous low. That is suggesting really that this is confirmed, and then the target on the downside in this case is going to be 100% using the blue degree, and you're looking for potential target towards this area in the Nikkei here, right? 23,779, 25,938. This is the next potential target from the Nikkei. And not only that, so you have what we call incomplete sequence from February 16 in the Nikkei, but also if you look at it from this peak here from June 15, now you can clearly see 1, 2, 3, 4, 5. 5 swing. 5 swing is incomplete sequence, right? 5 swing is incomplete sequence. Corrective sequence is always 3 swing or 7 swing, but 5 swing is incomplete. So this can either be WXY like what we are proposing, in which case then the rally here in the shorter cycle should fail below the X, which is what we see here. This is the X, 28,854. The rally should fail below here in 3,711 swing for the downside. Now there is another alternate though. The other alternate is we can call this move down here as a diagonal, and you call A here as a 5-way diagonal. And then if that's the case, then the rally doesn't necessarily have to stay below here, but it has to stay below June 15. Now either way, either you label it this way or you label it this way, the bottom line is the rally is going to fail in 3,711 swing for more downside, because the structure is just incomplete from February 16 and incomplete from June 15, right? So in the alternate scenario though, I could be rallying in a larger degree, right? I could be rallying in a larger degree like this in 3 waves, and then maybe even retest this or break a little bit and then turn slower again. Bottom line is we're gonna get another leg lower, and the more important level is not necessarily this X here, which is 28,854. The more important level actually is the June 15. This is really the key, and as long as we don't break above this trend line here, we should be eventually looking for more downside again. So I know within this kind of various possibilities, the ultimate idea is we're gonna be seeing more downside. But then in order to go there, we have various different paths. One of the possible paths is again calling it WXY. In that case, then the rally should fail below this X, if that's the case, and see more downside. And the rally should fail below the X, and the rally can fail below the X in a couple of different ways. It can fail more or less right now, then go down. It can do double and then fail here still below the X and go down. Or the other possibility, like we said, is not really X here, but you call A here as a 5-way diagonal, and then now doing a B. In that case, this rally can become like maybe even 1, 2, 3, 4, 5. 1, 2, 3, 4, 5, right? And then pull back B, and then C that can break below here, above here a little bit, but it doesn't matter. Look at this. I can break above here. I can place A here. and then I can place B here and retest or break a little bit above here. That doesn't matter. Eventually we are looking for more downside again. So the rally should fail in the sequence of 3 or 7 swing, because 3 or 7 swing is the structure of a correction, right? And so we're expecting that to fail against this 28,854 in the first degree, and then against, after that is against this June 15 in the second degree. But June 15 is the more important level not to be broken for this view to really become valid. All right, so that's the update here for today. And as always, if you do want to check our service, we have 14 days free trial, and I will provide the link in the description of the video, the YouTube video. And see you all again tomorrow. Have a nice day, everyone.